All right. Hey, good morning, everyone. Good evening, wherever you're tuning in from today. So, hey, everyone. I'm Jessica. I'm the developer advocate over at Xerox Labs, and super happy to have you joining us. So, for those of you watching, welcome back to the 10th episode now. Wow, 10th episode of Powered by Xerox. This is a developer-focused live stream where we explore different features of the Xerox ecosystem and interview developers who are building innovative projects on the Xerox tech stack. So whether you're building novel financial tools, integrating swaps into your application, or just simply looking for a better understanding of the Xerox protocol, the API, and governance structure, the Powered by Xerox live stream has something for you. So the way that the show runs is I'm going to start off with some announcements and then bring our guest on for today. So yeah, really excited to have our guest on. So I'm going to jump into the announcements real fast. So let me quickly screen share. Share the screen. Okay. So for those of you who've watched the previous episodes before, I'm going to announce again that we're going to host a Xero Expo, so our own conference, November 3rd. So that's exactly 2 Thursdays from now. So next Thursday. So for those of you who are in town for SF Blockchain Week, so San Francisco Blockchain Week, it's a whole week of just awesome blockchain events. Please do stop by. So November 3rd, Xerox Crossroads Xero Expo is hosting a free day of just a great time to meet other builders in the Xerox ecosystem, perhaps network to find potential partners. And then, so it's going to be a great event. If you scroll down a bit on this page, it's also linked if you're watching from YouTube. You can see some of the speakers, the lineup of the schedule, and just, overall good time. So we'll be having some technical talks, some VC talks, and then also a party afterwards. So please do stop by. Kind of similar or kind of related to that. So that week, we're going to end the week with the ETH-SF hackathon. So Xerox is super excited that we'll be sponsoring this event. So it's going to run November 4th to 6th. So that's that Friday to Sunday. And we're going to be giving away $10K in prizes to the top 3 projects that are building on the Xerox swap API. So if you have an idea and you want to have a space to build it, this is definitely the place to do it. So hope you can join us. You just have to sign up at the ETH Global website linked here. And this is all linked from our Twitter account. And the last piece of news is that Daria is our BD lead, so our business development lead, is going to be speaking at Web3 Dubai. So for those of you who are in that area, on November 18th, she'll be presenting an overview of how Xerox works, presenting some interesting case studies, and she'll be a great person to talk to if you're interested in integrating Xerox. So with that, I'm gonna take the announcements off screen. All right, and so then, let's just dive into the interview. So with us today, super happy to have on Oliver. So Oliver Mehr is the head of product and co-founder of Phuture Finance. And so Phuture is a decentralized protocol that they give users passive exposure to crypto assets through on-chain index funds. And we'll be talking about some of the products that they offer. And we'll also be asking Oliver how they use XeroX API under the hood to improve the performance of their index funds and therefore improving returns to their users. So personally, I think this is a really cool topic. As someone who kind of loves looking into different investment products, it's really exciting to see this space build out. Build out in the DeFi space, and talking with someone who's kind of at the forefront of that. So with that, let me bring Oliver on screen. Hey, Oliver.
Hey, hi, Jessica. Thank you so much for the lovely introduction. I really appreciate that.
Nice. Well, happy to have you on. Well, I guess maybe you can start off by introducing yourself a little bit and how you got into this space, how you got into this project.
Yeah, definitely. Well, my name's Oliver Mehr. I'm head of product and co-founder at Phuture. As Jessica said, I'll just reiterate, we're a platform that offers on-chain index funds both for assets like on Ethereum in the DeFi space. We also have a product on Avalanche, which is called the Colony Avalanche Index, that provides exposure to the Avalanche ecosystem. And we've recently just announced and launched a USDC-based product, which is built on top of Notional, which really makes investing and earning through fixed rate bonds much, much simpler than it has been before. And we can dive a lot more into that. In terms of my background, in 2016, I joined a fund called SVK Crypto. It's a UK-based, London-based fund. And initially, we was really just at the start of investing into different ICOs and really starting to get into crypto. It was very early on, nowhere near as sophisticated. The space wasn't as it is today. I remember like the priority gas auctions that you'd have to go through just to get involved in some of these ICOs, and the buzz around it was incredible. But we essentially built that fund up, as a family office. And when EOS came around, EOS was looking for partners globally to invest into the EOS ecosystem. And so, we spoke with Block One, and we became one of the global VC partners for EOS. And so, that fund, we was obviously based in London, with the only sort of like UK based fund there. So we kind of held it down for all the products in Europe, for all the products in London. And we built up a great network over the years. And our thesis there was really, because we were so early, it was like still 17, 18, 19. People were, still very unsure about how, what crypto was, how does it work. And so we were focused on investing into traditional businesses that could, take advantage of crypto or the blockchain and its capabilities without pushing all of the kind of, new UI changes and all of the things that you need to know to operate in crypto. So like some of the investments that we were making was into digital fashion, to showcase the kind of like how you could have proof of authenticity on the blockchain, but like from the user's perspective, they don't have to know anything about blockchain. So yeah, stuff like that. We invested through that whole fund's life cycle, and at the end of it, we really started to look at what was happening in DeFi, and we saw a gap in the market. We saw that traditional finance, passive funds were dominating. They were really becoming the lion's share of capital was going into passive fund structures. And we understood that at the moment in time, everyone was very passionate about what they were investing into in crypto. Everyone wanted to sort of like do deep dive research. They were very passionate. They were very engaged in the communities. But we knew that was going to change over time as people who are more casual came into the space. They're looking for a vehicle that can offer them, all of the exposure to crypto within one token. And so that's where we started to, basically develop Phuture. Phuture, slowly became, a living, breathing organism. We raised money for Phuture, just shy of $4 million. And, we started to really build out our own tech stack to support decentralized index funds. And so I think where we are today, is that we have these products now that they're not just for people who are just getting started in crypto. That was our objective when we started. And what we realized actually over time is, especially in this market, is that we want to create products that the most sort of hardcore DeFi users will appreciate. And that's why we've taken like extra steps to make sure that our products can achieve the sort of performance that you could achieve if you were like doing this full time. And so like if you take our DeFi index on Ethereum, right, we have 10 assets in that index right now. 5 of them have 50% of their reserves earning interest on Yearn. So, a lot of times DeFi indexes leave that opportunity cost on the table. They don't utilize the underlying assets. And that's one of the arguments why people say, oh, I'd rather do it myself. We're trying to close the gap between what you would do yourself and what we're doing for you, to the point where you just think, well, these guys are already doing it for me. They're paying for the gas. They're paying for the management. It just makes sense to buy a Phuture index fund. So that's the intro. That's how we are. That's how we got to where we are today.
Yeah. So essentially, yeah, that's like a cool, like going from, I guess, working with more serious investors, like initial serious investors, and then like kind of taking those learnings and then looking at the larger growth of the field and like all the people that are coming in who want exposure and that sort of investment, and like taking those learnings and applying it to these new people coming in, but also people who are serious about the way that they're investing and like want to work with people who like your projects such as yourself that are like taking the time to do the research for them, and helping like pay the gas fees and like take care of those logistics for them,
and make it simple as well. Like we want to make sure the whole experience is simple, you know, and it should be. And you know, we've spent a lot of time working on, you know, the application. I think that we have a very, very smooth and you know, nice experience now when you come to our application. All the information is there, but it looks good. The number of decisions that you have to make is basically obfuscated away from you, and we can get into all of that. That's how we use 0x to make it really easy. And you know, we try to also create brands around each one of our products so that they're memorable, you know, and as people learn about them, they'll see that there's congruent branding for each product, you know, across social media, across the product pages and so on.
Well, I also wanted to call out, I think you guys updated the page since I last saw it. So yeah, definitely makes.
What do you think?
Yeah, it looks good. Like to your point about like really making it obvious like what each piece is doing, and just like kind of streamlining the focus for
streamlining. And we've got rid of so much text now. It's very to the point. We want to communicate instantly what, you know, what the benefits are of our product, so that if you're a new person, you don't know about Phuture, you can learn very quickly. Okay, these are the things that we kind of like. These are the tenets that we stand behind. So yeah, that's another update. The team has been very busy over the summer. We've pushed so many updates this summer, released 2 new products, a fresh new app, a fresh new homepage, product pages that are brand new. Like there's so much going on, which is great.
Yeah. Well, maybe let's take a step back and talk about just index funds in general. So we kind of dived into, you know, index funds are great for investors who want exposure to the field, but kind of take a step back. Like, what is an index fund to begin with? Like, regardless of crypto, and why did you guys focus on this sector?
Yeah. So an index fund is, you know, essentially a basket of assets that is weighted by a specific methodology. So, you know, you can get all sorts of different ways of weighting them, and what it means to weight them is to have specific percentages allocated to each asset. You obviously have to allocate in some type of way, and there needs to be a reason and you know, a methodology behind that. And so, for example, with Phuture DeFi Index, it is market cap weighted. So we have a list of criteria that we go through. Every asset must meet all of them. These include things like, you know, having at least $5 million of liquidity, being live for at least 1 year. So after we've gone through that whole checklist, we'll have the assets that are eligible to go into the index, right? After that, we now need to figure out, right, well, how are we going to weight these assets? And so what we do is we use the circulating market cap for each one of these assets to weight them. And we actually have our strategy is officially called a capped circulating market cap strategy. And that means that any one asset can only be at 30%. So you'll see that Uniswap is actually 30% because we've capped it so that we maintain good diversification. And so what an index fund is a basket of assets weighted, you know, depending on the methodology, and rebalanced at a discrete interval, you know, in time. So for us, it is monthly. We rebalance the index monthly. We run the script on the last Wednesday of the month, and that then determines what the new assets are going to be. And then on the first business day of the next month, we actually execute that rebalancing and update the assets within the fund. So, like, what are the benefits of an index fund? Well, the first thing is that you get access to you know, a multitude of tokens, and I think this list is going to grow. I mean, we're at 10 now. I think we could be at 11 very soon, and I think we have some innovations that will allow us to support 20, 30 assets in the future. So you get instant diversification out of the box with just one token, you know, which is you know, especially if you buy it through a DEX, you know, it's the cheapest way to get access to 10 plus tokens that you can think of. Then on top of that, it allows you to ask a much easier question. You know, most people are bad at picking stocks or picking crypto assets. Like, over the long run, you may be good in one cycle, but over the long run, it's hard to continually find, especially as the noise level increases, find the right projects to invest into. And what an index fund allows you to do is answer a much simpler question. It's like, will DeFi be higher or lower than it is today in 5 years' time? That's the question we want to answer. How can we express that view? Well, we can express that through an index fund. So if I buy a DeFi index that each month rotates this exposure to the top performing assets at that time, it over the course of 5-6 years, if DeFi does well, that index will do well. So it simplifies the question down to just, I think most people can answer, will DeFi be higher or lower than it is today in 5 or 10 years? And if they can, but they don't necessarily know which projects will win. And I think that is quite a hard question to answer, because even the ones that are winning, the Uniswaps of the world, it's still uncertain how the token holder accrues value, right? Because at the moment, the token holder doesn't accrue value at Uniswap, and they might change that or they might not. It's still an unknown. So I think that by investing in an index, you de-risk yourself massively. So diversification reduces volatility of your portfolio, allows you to answer a much simpler question. We handle all of the we handle all of the swapping, all the trade fees that go into rebalancing. So it's a much cheaper and more efficient way of owning a portfolio of assets. I think that if from a tax perspective, you don't have taxable events because you're not selling assets, we're doing that for you. And also the benefit to an index is that slowly what we're trying to do is build up an ecosystem around that index so that you can go short, so you can express other viewpoints as well. So I think that would be, for me, the summary of why an index is popular. And I think most people have core portfolios these days. Core portfolio, in the traditional market was, comprised of the S&P 500, some other maybe, developing market ETFs, and then you might have a satellite of other smaller investments into individual names. That's, I think, the idea. And we think that over time, that's going to happen in crypto as well, as we go through multiple cycles, as people realize that they'd rather not spend all of their time looking at new projects, or they haven't been as successful as they thought they would, and they actually didn't outperform just buying an index.
Yeah, I totally agree with that. I think there have been points in my life where, I definitely want to dive into doing doing research on my own, but at the end of the day, it's a lot of, I just want to kind of set it and forget it in a way. For example, going back to traditional finance, looking at, I guess, traditional index funds, those have done well, because if you look at, like you were saying, in the long run, they definitely just outperform individual traders for the most part. If you just buy the index fund, down the road, they generally perform much better for a lot of the reasons that you brought up. So I guess from that, let's kind of focus more in on Phuture. So what kind of had a high level of Phuture, but what makes Phuture unique? And then also you kind of touched on the 3 products. So let's dive into that.
Yeah, let's do it. So on the index side, if we split it up into 2 sides, we have our 2 index products. We have Phuture DeFi Index, we have Colony Avalanche Index. Those are our index products. And then we have our sort of vault type products. And that is currently the USDC Savings Vault, where you can get access to, it's a single asset, when we're providing yield on USDC. What makes us unique on the index side is that we're the only index to be generating yield on the underlying assets. And I think that this is a really key point for people, because you have years sometimes where the index doesn't perform, and maybe it ends up flat. Maybe you have 0% growth over a 365-day period. For people not holding a Phuture index, they're going to experience drag from the fee, right? So they'll probably be down 1% based on the fee that they charge over the course of a year. Whereas if you're holding a DeFi index, we're currently generating close to 1%, which is our fee at the moment. So we actually cover the fee from the yield that we're generating. And I think that, yields are lower at the moment than they have been. And so when that picks back up, I think we could have a really strong 2, 3, 4, 5% baseline yield and remember, this is only half of our assets that are generating yield. The other half don't have Yearn vaults yet. So as more Yearn vaults come online for these other assets, and we can increase the number of assets that are actually generating yield, that interest rate is going to go up. But just our SNX alone is currently earning 12% APR, right? So some very good numbers there. And so it makes we reduce the opportunity cost of holding those assets because we do generate yield. We cover the fee, right, that people will have to pay. So essentially, you're owning the index fund for either free or you're getting paid to do so through the yield. And then, through the support of what we've done with 0x, we're able to support massive size. I mean, you can go to our platform right now. You can queue up a trade for 2,000 ETH. There's like $2.6 million there or thereabouts, right? And you'll experience like way less than 5% price impact. Like on our widget, it will tell you if you've gone over 5%, and it doesn't have any warning or alert, and that's at $2.6 million. So like the minting capacity for us, through our index funds is really large. On Colony, on the Avalanche side, we've partnered with Colony. It's one of the largest projects on Avalanche. They're a decentralized sort of venture fund, and they have committed to seeding Kai over time with $2 million worth of capital. So we have a very good sort of backing on the Avalanche side. We have 4 assets there at the moment. We're growing that to 5 at the end of this month. 3 out of the 4 assets are yield bearing at the moment, and the average yield is like close to 3%, just baseline yield without any growth in the underlying assets. Again, supported through 0x, can support massive size on both sides, whether it's minting or redeeming. You never have any there's no lockups, there's no withdrawal, like there's no times when you can't withdraw. You can always get access to your money, and so we're very, very excited about what we can do there on Avalanche, as we're the largest index fund by far on Avalanche. So that's the index side. Let me know if you want me to dive into the vault side as well. Happy to do that.
Yeah, let's take a look into the vault side.
Yeah, so just very quickly on the vault side, we're the first ETF, like sort of bond-like ETF, right? So USD savings vault. It has really multiple paths to it. The first is a retail angle. It's a great way to earn 3+% on your USDC at the moment, which is way higher than the AV or Compound. And that interest is being earned on Notional, which is a battle-tested platform. It's been around for years. It's the largest fixed rate lending platform. But also from another perspective, it's an ETF bond. USV holds many different we're kind of like dollar cost averaging into 6-month or 3-month maturity bonds. And so over time, as those interest rates move, there's opportunity to buy USV. So for example, if rates go up, USV will go down, which allows you to buy it and earn a higher yield over time as those bonds mature. So it's the first of its kind, and it makes managing fixed maturities like simple. Before you'd have to invest in a maturity and then you'd have to roll it continuously. We do all of that for you. We manage the rolling. We make sure that we invest into the highest yielding bonds at the time. So it's a very simple product.
So essentially, from the user's perspective, it's pretty automated. Like they don't have to go in and like.
It's like investing in AV or Compound, where you just literally you just lend your money and you start earning interest. It's the same thing, except the interest is 3 to 4 times higher, and there's no like managing of maturities or anything like that. So yeah.
Interesting. Yeah, can you talk me through the end user's perspective of how they would go about investing?
Yeah, so this is an innovation that we have created with USV. It's a very gas efficient operation, because we basically when you invest in USV, you're transferring USDC into, so let's call it a holding area, a contract which was holding USDC. You don't actually invest into Notional straight away. We have an automated keeper job that every, say, 2 days is checking how much USDC is in that account. If there's any USDC, it's then investing that into Notional. And so what happens from a user perspective is that it's costing you maybe just a bit more than a USDC transfer to enter USV, right? Which is really important, because if you have $1,000 and you have to spend $20 to get into the position, you've already lost 2%, right? So us making it as cheap as possible is very advantageous. And then when people withdraw from USV, we do it in a very smart way. So if there's any USDC available to give you, we'll give you that first. And then if there's no USDC available, we'll then look at what maturity is currently the lowest yielding, and we'll withdraw from there. And then finally, we'll withdraw from the highest yielding maturity. That makes sure that we maintain the average APR of the vault. We don't just withdraw from the highest yielding maturity and give you back the funds from there, because that will materially impact the kind of APR of the vault.
Cool. That makes sense. Yeah, you're diving into some of the, I guess, the jobs that you're using, but maybe let's jump back into PDI a little bit, because I do want to dive into like how you mentioned earlier on how you guys were using 0x. I think you mentioned for the rebalancing portion, or maybe that's from the prep talk, but maybe can you talk about?
I can tell you where the points are that we're using 0x, right?
Yeah,
so 0x is integrated deeply into our stack. So minting, when you mint, you're basically converting, say, ETH into each individual component of the index. Each one of those trades is executed by 0x, protected with your slippage protection, is executed at the best possible rate, is split between all the number of exchanges that are available on Ethereum. So that is how we're able to support a 2,000 ETH trade with less than 5% price impact, because we're handling it through 0x for every leg of that trade. Now, when you come to our platform to actually make an investment, you can buy PDI directly on Uniswap. Like, you can convert ETH into PDI. And for a lot of people who are trading smaller size, that actually does make sense to do. So what will happen is you'll input the amount that you want to invest, and in the background through our SDK, we will query 0x for a straight up swap, and we'll query 0x for a mint transaction, and then we'll look at the gas fee difference, and we'll figure out, based on your transaction size, should you swap directly on Uniswap or should you mint? And then we will just select the right transaction type for you. The user doesn't need to figure out what size they're doing, how much gas is going to cost. So that's something that we've done to make it really simple. And the reverse happens on the redemption side as well. And so 0x is embedded into both of those functions. And why is that important? Well, every dollar that you lose when you're minting or redeeming is coming from your return. And so if it costs you, $50 out of $1,000, you've already lost, half, 5%, right? And that is obviously materially affecting your return. So with 0x, we get such tight execution that when you're investing, you're not losing much in terms of price impact, which is benefiting you in the long run. And that same thesis is, why we included 0x into our rebalancing module. So when we rebalance, we are, obviously moving typically quite large transactions, 20, 30, 40, 50K at a time, and we need the absolute best execution. Any price impact, any slippage that's incurred, it is dragging the performance of the fund down. And so we use 0x in all of our rebalancing transactions to make sure that we get the absolute best price. What I love about it is that there's liquidity on 0x that is not available just through AMM curves with private market makers. You can get even tighter rates when you start to get into the really large trade sizes. And one other thing that I'll mention is that the whole thing is, in terms of rebalancing, is totally automated. So, what we do as a business is we are in charge of figuring out what the next assets and weights should be for the next month. We input that into the smart contract, and then the smart contract creates all the orders that will need to be executed in order to make the rebalancing happen. And then through Keeper Network, we have a network of keepers that are constantly watching this job. And as soon as orders pop up, they'll start executing those orders through 0x in a totally automated way.
Yeah, I think this, in a way, it's like bringing more transparency as well. Because if I understand it correctly, the strategies are within the smart contract, and so the investor can also go like peruse there, and then the job of the index manager then is just to execute. Is it just to execute the smart contract? Pay the fee?
Our job is just to decide on the assets and weights, and then we input that into the smart contract, and we invoke the reweight function, and then the contract creates all the orders. Basically, from that point onwards, we have no involvement in the process. The keepers will execute the orders. Sometimes the orders will be so large that we need to split them up. They'll do that. They'll split the orders up into several chunks, and is automated automatically.
I see. Well, so this Keeper network, is it kind of like just like running daemons, just like different threads of like different jobs in the back? And they
Yeah,
just
it's like you know, like cron jobs, you know,
cron jobs. Oh, yeah.
and you have you know, these keepers are because we have several jobs there. We have one for rebalancing. We have one for like the deposit manager that manages the assets on Yearn and on our index. Like every 2 days, it updates, and it's just a really useful tool for, you know, automating certain processes.
Mhm. Yeah, and then yeah, you're talking about like with when we were talking earlier on of like deciding at that decision point of like when you guys chose to go with 0x versus like doing the aggregation yourself. I think that
Yeah.
like that's an interesting like decision point. Like was
Yeah,
it you would talk a little bit about that?
I can dive into that. Yeah, I mean, what we found is that we initially created Future and we supported Uniswap V2 and we supported SushiSwap, right? And those were losing market share to V3 rapidly. And what was happening is that we weren't able to support the number of assets that we wanted to support because the liquidity that was existing on SushiSwap and Uniswap V2 wasn't sufficient for our criteria. Our criteria is minimum $5 million to be in our index. And so, you know, we were looking at, okay, well, we need to support Uniswap V3. Like, let's begin creating adapter for it. We want to support Curve. We want to support, you know, all of the various different exchanges. And we realized like we're creating adapters for each one of these exchanges. And then we're having to create infrastructure that figures out which one of these exchanges is the best place to trade on for the trade that we have to do. And you know, the realization was, well, we're just building a 0x at this point. You know, we are basically just going through the steps of building an exchange aggregator when there's no need to do so because 0x has already been around for so long, battle tested infrastructure, you know, they already have all the adapters ready. And this would allow us to also go natively multi-chain. So we could support 0x on Ethereum, but that would mean that we would also support all the exchanges on Avalanche as well, which was really important to us because that's where we were going. And so that was the decision to really make. And you know how we were going to integrate it and how we were going to make sure that, you know, we basically have all of the checks and balances within the contract to make sure that malicious data couldn't get passed in. That was one of our concerns. Obviously, you know, basically when you query the 0x API, you get a blob of data and then you input it into the contract, it's decoded and it executes, right? But you know, any sort of data can be passed into that contract. So we needed to make sure that we had ways of verifying exactly what was happening so that if, you know, random data was passed in, we revert because, you know, X asset wasn't bought, Y asset wasn't sold and wasn't the right quantities, whatever. We have that verification in place to make sure that you can't just pass random data in. Once we solved that challenge, it was like, all right, great. We have, you know, every available exchange on Ethereum and Avalanche available to us. We have the best execution. We have private liquidity for market makers. So, you know, we're in the best spot possible.
Yeah, so making the aggregation easy and then also like building up that security around you all. I guess to the point of the multi-chain, yeah. So yeah, again, 0x by default multi-chain, like you mentioned. Why did you guys decide Avalanche like after PDI?
Mm-hmm. We felt that, you know, I think with when you're looking at Avalanche, they have a growing ecosystem. And if you look at what's happening with, for example, with Trader Joe and Liquidity Book and, you know, some of the other platforms there, they are actually starting to have some real innovation, you know, some real innovation that's not just copycats of Ethereum. And I think that's really exciting. So I think the DeFi sort of ecosystem on Avalanche is growing, has a lot of potential. We had the opportunity at the time to partner with a great partner, which was, you know, enable us to get great visibility and become basically the de facto index, you know, for Avalanche. And we already have, you know, money markets that support Kai. You know, we're looking at leverage platforms. We already have an options platform that allows you to protect your downside on Kai. So we've already built an ecosystem around it. And I think that, you know, Avalanche is going to experience, you know, a lot of growth over the years. and is definitely here to stay. And so that was why we wanted to make sure that we had a product that allowed people to get exposure to that sort of ecosystem as they start to innovate, as they start to grow outside of Ethereum and actually create novel structures that they can on Avalanche.
Yeah, so being on board with these ecosystems that you anticipate are gonna grow.
Yeah, we want to be where the users are. Wherever the users grow, we want to have products that people will allow people to get exposure to the upside growth.
Mm-hmm. Makes sense. I guess I want to take a pause here for those who are watching. If you have questions, feel free to drop them in. So Oliver is here live. I think, so feel free to drop your questions, whether you're on Twitter, YouTube. We're happy to answer them here. Well, I guess maybe some questions that I have then are the adoption. So how do you guys plan on working with either retail users, or are you looking at working with investment firms, or like getting into centralized, or getting, I guess, what is the strategy for growth from the team?
I think our products are applicable to all of those user groups that you've just mentioned. We focused on, I think, two things. First, building a platform that is user friendly. For people that are, I think for people that are involved in crypto, that have some basic understanding of crypto, our platform is really easy to understand and get a grasp of. This is how we're going to attract so the retail users that are coming to our platform, giving them a nice experience, giving them a simple experience, and at the same time, we're focused on distribution. Like, at the end of the day, we actually don't mind where you buy our products from and how you invest into our products, as long as we have the right distribution network. So we're working with the guys at 0x to see how we can potentially integrate the minting and redeeming functionality directly into 0x. So if you guys are on Matcha and you want to do a really large trade, it will actually allow you to mint the index directly on Matcha and get the best possible rate. So distribution is really key. And I think with distribution, it allows you to get access to larger investors. I think for us, we understand that, from sort of 0 to maybe 500,000, like, the high net worth investors, there's so many people out there in that bracket that we can target and I consider them to be the retail investors, that we can target to bring them to our platform. And I think we have great products that really minimize the gap between what you can do on your own and what we're doing for you in a very cheap and cost effective way. But our strategy on the distribution side is to make sure that we're on lending platforms, make sure that we're in every wallet possible, make sure that we build up liquidity so that we can start to talk about moving PDI onto centralized exchanges, building that infrastructure up, looking at custody solutions so that larger institutions that have certain mandates to hold their coins in particular types of custody can do so with PDI as well. So I think those are the two kind of tenets of how we're going to attract people. And we also want to make sure that we have a sort of diversified product range. So we have products for a bull market, we have products for a bear market. I think a lot of people in stable coins right now, and they were looking for some way to earn interest, and that's what USV is for.
Well, kind of looking then towards the future. Maybe I'm kind of a leading question, but so you mentioned PDI and the other tokens that are related to the funds, but what about the PHTR token, the future token?
Yeah.
What's the current situation with that, and what are the plans for it?
Yeah, so the future token has been the medium through which we've raised capital to fund the business to allow us to build these amazing products and this amazing platform. And what we are focused on, and what we've been focused on, is really building up revenue streams, building up user bases, because eventually what we want to do is start to share that revenue, that distribution that we're getting to our governance token holders, to our PHTR holders. And there's lots of plans in the works to make that a reality. We've already started to see very good revenue growth on Avalanche, and slowly building up our TVL on Ethereum as well. There's going to be a lot of good flow coming from those products, and we're just going to continue building that. I think the more value that we can build for our products, the more value that we can distribute to PHTR holders. So there's going to be a lot of exciting kind of token model updates that are coming that will allow people to get access to that revenue.
Yeah, so like a holistic plan going down the line. So kind of a just like a tangent question. Okay, so the Colony CAI token, why is it called Colony?
Well, Colony is the sort of the title partner because they're the title partner. They seeded the index. We also had a joint LM program, which was both the CLY token and the Joe token on Trader Joe, and so and they've committed to investing up to $2 million into the Kai index. So because they're the title partner, we put their name there, Colony, which everyone knows in the Avalanche ecosystem. So it's a big draw for us. Colony Avalanche Index.
Okay, I got it. So then, yeah, well, I don't want to take this pun from you, but like, what does the future hold for Phuture?
Yeah, we have a lot of exciting things that are coming up. One of the things that we know is an issue is kind of the minting costs. Like we want to have an index that has 20, 30 assets in it, but the reality is it's very expensive to mint 20 or 30 assets in one go, in one transaction. Not least because you're dealing with a block size limit. You're dealing with a transaction that would be millions and millions of gas. It would be hard to get included, etc. But also just in general, like even at today's situation, we want to make it cheaper for people to get involved, and we have some really cool innovations that we're working on that we can't say too much about right now, but that we feel is going to really move us in the right direction to not only allow us to give people a much cheaper minting experience, but also allow us to expand the index so that it's truly diversified, right? If you're talking about 20, 30, I mean, the S&P 500 has 500 assets. That's our target. We want to get to, hundreds of assets. Right now, there aren't hundreds of assets or even 50 assets that meet our criteria, but over time there will be, and we want to be able to support that. And then we have obviously we have the new token model initiative that's going to be coming. That's going to really, I think, drive a feedback loop for not only our token, but more importantly, our products. And so you'll be able to get access to additional revenue from our products, and you can multiply that revenue by being a PHTR holder. So it's by being a PHTR holder, you're kind of like a first-class citizen in that ecosystem. You can multiply your rewards. We'll have more information coming out about that. Of course, we're always improving like the user experience. We've got a lot of cool things that are coming to our application, showcasing sort of like the APY of the index on the chart, and having just giving you a bit more of an insight into like the yield that we're generating on these underlying assets. And then we are really looking at how we can go cross-chain. In terms of like a total cross-chain index, but that's something that is under wraps at the moment, but we'll release more when we can. But it's a big project of ours.
I guess more reason then to have you guys back when more cool things come out. Nice. So are there any resources for someone who either retail users who are interested in diving into start using PDI, or maybe developers who are interested in exploring, either working with you all, or resources for devs and retail users you could share?
Yeah, definitely. So let's start off with the developers. We're really pleased for anyone to support our minting and burning logic and trying to tap into the liquidity that we have there. We've built an SDK, the Phuture SDK. It makes it really easy for you to mint and burn our indexes. You can easily integrate that into your front-end application. And actually, we've added another feature into that SDK, which powers both our app and also Colony's app for on the Avalanche side. And it's called an auto router. And what that does is exactly the functionality we were talking about earlier. It decides for you, based on your input size, what whether you should be doing a swap, whether you should be doing a mint, or whether you should be doing a redeem. So we automatically decide your trade type based on your input size, and that's one of the auto router functionalities that we have in our SDK. So people can download the SDK and they can start to integrate directly into our contracts from whichever application they would like to support. And any questions on that, feel free to jump into our Discord, or we can set up a group and we can run you through any questions you might have. And then on the what was the first part of the question?
For retailers. yeah, for users who just want to start
Retail
investing.
learning, right? Yeah.
Yeah.
So we have two areas, like two resources. The first is obviously our website. The website you can go to will give you an overview of kind of the key objectives and the key goals of PDI. So if you go future.finance/PDI, you'll get taken to the website. It will show you the kind of the breakdown of the assets at the moment, and it will have some links to the documentations page. If you really want to dive into the methodology, docs.future.finance, you can find the PDI methodology, which is broken down into sort of the token characteristics, the token supply criteria, liquidity, security. You can see exactly what goes into the methodology, and we're very transparent. So we have within that doc section, we have a table, and it shows you the GitHub file that we have used for each rebalancing. So there's a whole script there that goes through every criteria and spits out at the end the assets that we're going to be using. And so we publish that each month so that people can see exactly how we got to the assets that are in the index. And so there's a wealth of information there. If you really want to just dive in, you want to see the chart, you want to see the performance over time. I mean, PDI is up like 7 or 8% just in the last 7 days. You want to see the assets, the weights, go to app.future.finance. And there you'll be able to see, all of our products. You'll be able to see all the information on our products right there.
Or just take a pause to take some notes, because I'll definitely be dropping links to those resources down for those who are watching on YouTube. So definitely go there after the show. Yeah, I feel like one thing I love about these episodes is like finding projects such as Phuture that like I feel like they scratch the itch of what I was looking for in this space. So yeah, for myself, I'd love to dive more into it. Cool. So, and also, yeah, really exciting to hear that you guys made that the auto router SDK.
Yeah,
public. That's really
a
interesting.
huge improvement, because before we had, the user would have to decide whether they wanted to do a swap or whether they wanted to do a mint. Now you come to our app, it's just buy, sell. You want to buy, how much you want to buy, great. We'll tell you where the best place to go and buy it, based on your trade size is. Makes it really simple.
Nice. Well, I think we've touched on all the topics that I had off the top of my mind. Was there anything we haven't talked about yet that you want to highlight?
I think we covered a lot. I think there's going to be a case study coming out with 0x that really highlights we basically have a case study that shows you what our rebalancing was like before 0x and what our rebalancing was like post 0x. I think some projects have gone down like the auction route for rebalancing, other index projects, and why we think the way that the 0x approach and the way that we've decided to go is the right way, is because with an auction, the auction and the person participating in the auction, they have to get paid, so there's a profit element to that, and then plus they also have to cover their gas fees, right? So it's almost like, okay, this part, the auctioneer is trying to make as much as they can in a competitive environment where everyone is essentially, trying to undercut each other. But you only undercut each other until, there's just enough juice there to make it worthwhile, right? But if you think about our model, it's completely the opposite. Like 0x is incentivized to actually give you the absolute best execution. Keeper Network pays the gas fees for all of our transactions, so we're not worried about covering gas fees whatsoever. And there's no situation in an auction environment where you're going to get positive slippage. But we often find in some of our trades, we get positive slippage. We actually end up with more than we started with. And so we think that, and this is only going to improve, AMMs, private market makers, the liquidity network in general is only getting deeper, and which is going to mean that we're able to push more sides through 0x more efficiently. And so we think that doing that was the right approach. Kai has only been live for a month, just over now, has over 5,000 investors, hit $1.2 million in total liquidity on Trader Joe at its height. We had, I think that was driving a lot of incentives through it. It's come down from there, but the product is the kind of the underlying components of the product hasn't changed. I think it still has a very long growth trajectory ahead of it, and we're only improving that on every monthly rebalancing.
definitely a lot of exciting stuff down the road for you guys. So
Yeah.
Yeah, we'd love to have you. Yeah, we'd love to have you all back once some of the newer features that you're alluding to come out. But I guess with that, yeah, we'll maybe just wrap it up then for today. But
Yeah.
it was just like a really great time just getting to talk with you, hear more about the project. Again, personally, just very excited. Also, I think for the space, definitely a leading innovation in the space. So yeah, happy that you guys decided to work with 0x, and thanks again for being on to talk index funds, talk the mechanics of how you guys are doing it behind the scenes. So yeah, we'd love to have you
Thank
on.
you so much.
Yeah, and look forward to
We'll come back on once we have our, we're pushing products constantly. We've been so active. It'll be not we won't be too long until we have our next products out that we can talk about. So that would be great. We can do this again. But I really enjoyed the chat. Great to talk about all of kind of the inner workings of how we're using 0x and the innovations that you guys have enabled from our side. And we look forward to continue to sort of using new features that you bring out in the future to improve the experience for our investors and the returns for our funds.
Nice. Well, definitely. Yeah. Again, I feel like this is like the highlight of like a novel financial solution, like when I talk about it in the intros. So thanks again for tuning in, and thanks again to everyone in the audience who's watching live as well as who watch the recording afterwards. Yeah, definitely take a look down in the resources, and yeah, we'll be seeing Oliver and the Phuture team soon. So,
perfect. Thank you.
Bye.